Let me take it across to Mayuresh Joshi as well. Mayuresh, hi, afternoon. What is it that you're making of this very range trade that we've been stuck in for a while now? But at the same time, it's the broader markets once again wherein you are seeing movement. And today, unfortunately, it's quite down. Where do you think the large caps are going to find the next set of triggers from?
Afternoon, Aisha. I think clearly the markets are reacting in terms of the geopolitics that is happening specifically in the Middle East. But there is some hope and resemblance that if there is any news that comes through in terms of de-escalation over the next few days, I think the range-bound mood that we're probably seeing in the market, because the market has gestated the worst in terms of the first 6 or 7 days of the Iran-Israel conflict that we've probably seen. And therefore, I think over the next few days, if we hear something on de-escalation, something which probably is assuming that the worst in terms of the conflict might be behind us. I think we'll definitely come out of the range bound trade that we are in. Obviously, I think within large caps, the construct still remains positive in terms of select leadership BFSI stocks because the space generally looks geared up in terms of better earnings growth. Obviously, OMCs, the oil and gas space becomes more of a tactical trade as we speak. But generally, I think for large caps, the mood has been pretty sanguine so far. I think it's the mid caps where I think the entire action might be over the next few quarters as earnings start coming back. So I think mid caps and selective leadership stocks within that universe might actually fare well, where earnings are expected to hold up, at least in the domestic context, for the next few quarters.
So that's the take on the markets, but a very interesting news flow on the bottom of your screen. Have a look at that. It's HDB Financial IPO, one of the subsidiaries related to HDFC Bank, and that IPO will open on June 25 and closes on June 27. That's as per the agencies what we are picking up. Indeed, we'll get more details on this particular front, but HDFC Bank will be the key to watch out for. We are waiting more details on this as well. But let's also get you some of the stock ideas as well from both of our experts. And Akshay, you go first. Tell us which is the stock that is making up to your list.
From the buy side, Escorts is the stock which has a good short-term technical setup. So if you look at the stock, 3260 is where it trades. It has shown a strong recovery backed by good volumes from the support zone of 3100. And this bounce back is promising enough to see targets of 3372 on a short-term perspective. As a risk management, you can work with a stop loss of 3197 on this buying position.
Right, okay, that's the take coming in on some of those individual stock ideas. Kunal, would you have anything to recommend?
Yeah, large cap names, and interestingly, Axis Bank is back again to the breakout more, just about that 1200 plus mark. So would look out for higher targets closer to 1250 for Axis Bank, stop loss at 1205. And M&M is the stock which is heading towards a breakout about 3100 levels. So if the stock closes about 3100 marks over the next couple of days, that could be a very interesting breakout trade for M&M. 3200 could be a target post that, stop loss at 3050.
All right, so those are the two buy calls coming in from Kunal, as well as Akshay also gave us his take. But Mayuresh, give us some sense that within this lot of sector churning that is underway, which sector do you believe is poised for a good recovery? We just concluded the earnings season as well. So any sector do you believe that you will be watching out closely, maybe for the next couple of quarters, wherein earnings and valuation support can take the stock prices higher as well?
No, afternoon, Shrishti. I think healthcare as a space is something where our belief is selectively stocks can do well. Within healthcare, hospitals as a space has delivered a very decent set of numbers as far as Q4 is concerned. And therefore, our take is the asset-light model that a lot of hospital stocks are embarking upon over the last few quarters has started yielding results, both in terms of the average revenue per operating bed as occupancy rates are inching higher. We're also probably seeing the average length of stay coming down as hospitals mature. And therefore, I think hospitals within healthcare as a space is where I think the earning stability might actually continue. And a lot of hospitals are showing that earning strength, specifically in their price strength as well, as we see it in markets within India. So I think the ratings, rankings, institutional holding, all the elements that we follow in CanSlim are getting exhibited by this space itself. Certain hospitals like KIMS, as an example, Fortis Healthcare, Narayan Rudralaya, are stocks where earning stability might actually continue over the next few quarters. The other space, obviously, I think within BFSI, you've obviously seen some strength that happened for the NBFC stocks. Our own sense is that select NBFC stocks might still continue doing well, in our opinion. And therefore, in a falling interest rate scenario with RBI front loading 50 bips of rate cuts, the expectations in terms of stronger franchisees with a better diversified borrowing mix, expectations in terms of a better advance mix as well, better capital adequacy, and therefore, I think a better take in terms of the overall balance sheet growth. Leading to better ROEs and ROEs. I think they can continue doing well. So stocks like Shriram Finance, as an example, is something that we continue holding in our domestic and global portfolios. And last but not the least, I think a few of the consumption-driven stocks. Our own sense is that with better monsoons, rural, semi-urban consumption, which has started coming back, should come back even strongly in the second half. And therefore, I think a few of these apparel makers, Vishal Megamart, which just concluded a big block deal, V-Mart retail, the SSG growth has been pretty decent for these companies. It's a good mix for apparel, FMCG, non-FMCG. The price points are appropriately placed. And in tier 2, tier 3 cities, where the expectation is that if growth rebounds very, very strongly in terms of discretionary spending, I think these guys actually might be guys who can benefit quite significantly on all parameters that we're probably put through. And therefore, rating rankings look superb. So I think Vishal Megamart, V-Mart, might be a couple of ideas on the semi-urban stroke rural discretionary spend, which can actually exhibit better volume and price moves as far as balance sheets are concerned.
Right, okay. While India's leading cement companies, that's Ambuja Cement and ACC, have achieved a landmark sustainability milestone, the two companies have now reached net zero targets validated by the Science Based Targets Initiative. Remember, SBTi's corporate net zero standard is the world's only framework for corporate net zero target setting in. Okay, so that's that on, what we're picking up on ACC as well as Ambuja. And that, of course, is the commentary coming in from Vinod Baheti from the Adani Group. But just quickly, taking a look at what the market is up to. And we're trying to get a smidge up, at least on the Nifty right now. We're about 3 points higher on the futures. So trying to cover ground. But again, it's been just such a narrow band that you've had today from the word go, really. This jagged edges really mean nothing because it's been a very narrow move from the high to the low of the day. It's JSW Energy, Supreme Industries, Adani Transmission. These are some of the names where you have seen a fair amount of weakness trickle in for the equity markets. And if I just look at some of the names which are pretty active, look at a KPIT Tech. This has been a very steady performer. Today, the stock is down about 2% or so. It's seen an OI build-up of almost about 25% Vedanta, SBI Cards, Adani, Green, Bosch. These are some of the very, very active movers in trade. But Mayuresh, as a theme in the market right now, what do you think will continue to remain laggard? And does IT come to the top of your mind?
I think within IT, again, I think large cap ITs might lag a tad bit compared to the mid cap space, because I think the commentaries for select mid cap companies, Ayesha, have definitely been better and encouraging in terms of order wins, pricing, utilization, etc. So I think the lag effect or the deferment in terms of orders, in terms of what probably goes through in terms of discretionary spending, as far as multi-million, billion-dollar orders are concerned, I think that might just drag earnings a tad bit in our opinion. So I think large cap IT might lag compared to mid cap IT. And our own sense is that metals generally as a space might actually lag a tad bit as well. The expectations in terms of global growth at this point of time still look circumspect. China still looks circumspect in terms of a recovery as far as the real estate market is concerned. And therefore, I think subdued LME prices along with subdued demand, I think that combination might not give the operating leverage that a lot of metal companies are probably looking at. Let's not also forget, I think there are a lot of initiatives that are being put through as far as the European Union is concerned in terms of production of green steel. And therefore, a lot of modifications are happening as we speak towards the ferrous element of the metals universe. So I think metals as a space might lag as far as performance is concerned and might just underperform the broader markets over the next couple of months.
All right, those are the sectors that one can definitely look at this point in time. But with this, we are counting down to the market close then. But before that, let me thank a Akshay, Kunal, as well as Mayuresh for taking the time out and speaking with us this afternoon.